Welcome to Markets Now. I'm Michelle Rook along with Brad Koima with Koima Varlick, and we've got most of the grain and livestock futures complex leaning lower here this morning. And Brad, let's talk about kind of a risk-off day, and that seems to be weighing on this cattle market in particular.
But for sure, yeah, these are usually we have more fun with these little visits, don't we, Michelle? Thanks for having me on.
No doubt.
But without a doubt, I believe we're having whether they want to call it a risk-off day or macro day, whatever. The cattle market it's notorious for being in the splash zone. I call it, right there where if there's something to go wrong, uncertainty is bearish cattle. It's just what it is, guys. And as there seems to be more and more concern about government shutdown, why specifically that has to impact us so greatly is frustrating. The government was shut down twice in 2018 in 2 months, 35 days or something like that. And yeah, am I frustrated with the baloney that goes on there? Of course. Hopefully, something happens there. Stock market is down quite a ways. Now I've seen worse days than this on the stock market, but I sure think that seems to be what's undermining confidence on the part of the long speculator here today, for sure, to start out with.
All right. And some of it might be end of month and end of the quarter profit taking by that spec community that has been long for so long here. But where do we have to hold here today on the charts to not have funds continue to liquidate even more?
Right. Well, I think that's a good question. We're at right while we're visiting here, we're at an important area that I think will make a difference on a closing basis. I would prefer that December cattle does not close above 189.20. We're at 189 even right now. But yeah, you're getting some of these quick turning funds already coming out here, I think, and a close below that would trigger more of that. I think for more of the funds, and I'm not a fund manager, okay, but looking at what I'm guessing where their stuff would probably be at is probably around 187.50 for kind of a hard stop in the December cattle where the open interest is. If that happens, I think things will wash out even further. And, it can happen. We're at a big price level here. And even in 2014, I remember we had a hard break early fall, $8-9 futures break, and then came back again to make new highs. So when you're at these kind of price levels, I'm afraid the vulnerability of the market is real. Now, do I think there's something different in the fundamentals of the cattle market? I do not. I don't see anything in the statistics, for instance, in the last cattle and feed report, to make me think that there's anything different from a cattle supply side fundamental situation. In fact, the way the placements were skewed, it looks like that tight supply for the beginning of the first quarter of next year still looks to be very real. So, but yeah, we got to ride out this deal here. Hopefully we can right the ship here and get a little more confidence back in the general economy and the stock market here, hopefully today.
Yeah, hopefully we'll firm up here. Otherwise, will this weigh on cash trade this week or give the Packers a little leverage, unfortunately?
It always does. If we'd have done this thing on Monday morning, I'd have said, you know what, shoulders are manageable. They're pretty tight here in the north. The south was amazingly steady, even with that, weak futures. There was areas like my area, 186 was $1 higher. Western Nebraska at 185 was $1 higher. So I would have said steady higher. Now, obviously this wrecks psychology, but it is only Tuesday, so we'll see. Hopefully people are a little more, got a little more bow in their neck and we can, hold here till Thursday, Friday. I guess I would still lean toward thinking we could be at least steady.
Yeah, no doubt. And we did have big negotiated totals last week over 87,000 heads. So, that was positive to see. Let's talk about the hog market. Hog and pig report on Thursday. It's end of month, end of quarter. We've tested both the upper and the lower end of this trading range, but where do we go now?
I think we tested both ends of the range since we talked last week, right?
Exactly, we have.
These hogs are amazing. If any of you youngsters out there wonder what trading pork bellies was like, I'll tell you that's about like what the hogs are like now.
Yeah.
Now that we're near the bottom side of the trading range, and now we're starting to look forward to Thursday's report, Looking at the statistics, if we come out on the guesses, and actually the last while they've done a pretty good job of guessing, but if we'd come out on the all hog number 99.3%, that would be the lowest all hog number for this time of year since 2017. So we are getting into a few less hogs. The kept from marketing number, same story, down 0.6%. If that's right, that would be the lowest kept from market number too, also since 2017. So, bottom side of the range, looking forward to maybe a little tighter numbers. China's a question mark for me. The exports year to date have been pretty decent. So who am I to doubt that deal? So my inclination is to think that we could maybe crawl out of here a little bit on the hogs, but they've been very, very difficult for me to trade for sure.
Yeah, you and everybody else. What about the grain trade? We're kind of leaking a little bit here as we speak, but we had a decent close yesterday. The November contract in the soybeans got back above the August low, but are we in jeopardy of taking that out and closing below it today? And if we do, what happens?
Yeah, I'm disappointed in the action, Michelle, this morning. I thought, you know what, I'm going to be a little more optimistic here with Michelle this morning when we go on, because we had, like on the November beans, we held at a great spot. That spiked low, came back to close higher, had a doji, which is makes the next day important. And I thought, boy, a higher close in the beans today, and maybe we're there, maybe we got that seasonal low in. And even on the corn, this big base here, which makes me a little uncomfortable. Is it going to be that easy that everybody gets to buy it at these lows here? But I had thought too, if we could have got a close above December corn above 486, which isn't very far away, less than a nickel, above the 40-day, that maybe we'd come out of this trading. I'm going to stick to my guns. I'm disappointed that I would have thought with the escalation again and tensions here in the Black Sea with Ukraine, Russia, that maybe we'd have gotten a little more energy out of that, particularly in the wheat trade. But so far, not so much. But I'm looking for a place to buy it. I'm looking for a low. It's the time of year where that's what we got to be doing. And I don't know what the crop size is needed as the USDA, so why even talk about it? But this is the time of year where I think we got to be geared a little more toward thinking seasonal lows.
So you're hinting there that you don't think the quarterly stocks are going to make a hill of beans of difference.
Historically, beans go up after that report. I get it. I don't know. You and I have been at this long enough.
But corn, it's been fairly volatile, remember?
Yes, absolutely. For sure. I would not think that this is the one that the USDA is going to, who knows? I'll say that and be exposed. But from these price levels this time of year, given the uncertainty of the crop, I guess to me, I would still rather, if I was an end user at least, I would think on that side of the market. I think on the long side.
Okay. Well, we'll see if we trade the report. If the government shuts down, Katie barred the door, we might see more fund liquidation and everything,
You make a good point. Why don't we just shut down LMR while we're at it too? Because, we don't need to know what cash cattle are worth, right?
Yeah, I gotcha. All right. Thanks for joining us. As always, Brad Koima with Koima Varlick. That is Markets Now.